What's going on, traders? Hope everybody's having a great long weekend. Markets are closed on Monday. It is President's Day and a bank holiday, so the majority of the markets will be closed. Futures will be trading. I think that there will be lower volume, so I'm not really sure that it will be worth participating in. I probably will just sit it out. Either way, that gives us a little extra time to prepare for the week ahead. And yeah, so we're going to do some analysis here on the futures market. ES. We'll look over some of our other market internals that we like to analyze and see about coming up with a plan for the upcoming week based on the charts and not our emotions. With that being said, of course, all the information here in this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So with that out of the way, let's get into first our economic calendar and see what we have to look forward to this week. So let me pull that up right now. If I can find my, no, okay, here we go. All right, so let's take a look at what we have here for the upcoming week ahead. And of course, Monday, as I mentioned, markets are closed, so we've got no data there, nothing to really worry about. Tuesday, pretty quiet as well. In the morning, we do have Walmart earnings, which will be interesting to kind of watch as far as kind of what the consumer may be, the strength, of the consumer. So we'll watch that a little bit, but not really a huge market mover. However, Wednesday, all eyes really are on Wednesday. We've got Nvidia reporting earnings, really the last big tech name to report their numbers. So everybody's going to be watching that. Of course, semis have been, without a doubt, on a tear recently. So they've been really helping this rally in the markets, and we will be seeing how how the market reacts to whatever Nvidia does report when it comes to their earnings. We do have FOMC minutes as well at 2 o'clock. But that is just the information from the last meeting. So we could see a little bit of volatility, but these have been very subdued recently. So I'm not really too concerned about that. Of course, I still won't be in a trade coming into that release, but I don't really think it's going to be too much of an issue. And we do have Bostic and Bowman speaking as well. 20-year bond auction at 1 o'clock. I will be paying attention to that as well on Wednesday. But really the big thing that I think is the most important is going to be that Nvidia earnings. Jobless claims on Thursday at 8:30, so I will be paying attention to that. And Fed Waller speaking as well. Crude oil inventories also on Thursday. And really nothing there as far as earnings that I'm too concerned about being a market mover. And then Friday, relatively quiet overall for the 23rd to close out the short week. So there we've got it for our economic calendar. Got that out of the way. So let's kind of move into the charts here and start off with the weekly time frame. What can we take away from that? And then we will, of course, work our way down. So, we have been watching now this extreme overbought, readings that we've been seeing here on our Momo indicator, and showing a little bit of weakness now. Now, of course, that doesn't mean that we're going to see this type of move, because we saw here a little bit of weakness, and then it pushed up higher, a little bit of weakness, and then it stayed almost for another month and a half before actually finally turning down. But either way, we do want to note that we have been watching these extreme overbought conditions for a while, so we'll see how that develops. But just getting into the price action, really over the last 2 weeks, we've created a nice balance range with the markets in last week kind of failing to make a new high, kind of a little look below, a look above, and then came back down into the balance range, came traded back down to the bottom here. And now, of course, this is being recorded on Sunday at night, so futures market, the new weekly candle has opened. Not really too much movement going on right now. But you can see here the balance range really that we have created over the last 2 weeks. So, we're really not going to see that move, a bigger move, the next move, until we really start to break out of this balance range, right? So that's what really we're going to be looking for to see that next confirmation of whether, what steps the market wants to take. Are we going to come up, come back and retest and then make that move up higher? Or do we finally break under, come back, retest, and then make this move lower? And of course, we're going to make a plan for each scenario and where potentially price may be heading, depending on where we start to break out, right? So either way, we're going to start to draw this out here to have just some levels for that balance range that we've kind of established here. You can see pretty much the lows were the lows of the previous week there. So 49.33 and a half, anywhere in that area we're going to pay attention to as the bottom part of our balance range. That's also the high of the week of January 22nd. So if we start to see price accept under that, under this level, well then of course we're not going to chase the breakout, of course, we always talk about that, but then we can look for this type of move, come back in a retest, and we potentially come back down a little bit lower. And of course now if we see actually acceptance back over that 50-50 we'll call it, and really start to hold there, right? I want to see a daily close, 2 or 3 daily closes over that, maybe even a weekly close, because you can see here we tried to push up, and we'll get into the daily here in a moment, but a 2 or 3 day close over the top of this balance range to give us that confirmation that we can potentially make that next move up higher, right? So but what we can also do, as far as that intraday perspective, this is going to be a little bit bigger, so I should say maybe a daily perspective, but we can use our half gap here as kind of a over under point for whether we are going to trade back down into the lower part of the balance or up into the higher point. And really you can say the high of the week of the 29th really is probably what we should be paying attention to, just under 5,000. Of course, we're going to be watching that 5,000 as a whole number, psychological report, level, of course, but just really probably want to see a little bit lower than that, under this 49.97. Maybe could bring it down to the 49. Hold on, there we go. Well, actually, let me see what the high is here. Yeah, 49. We can call it 49.97 and a half, thereabouts. But it could be a little bit lower. That's 49.93, anywhere in that area. Give it about 2 or 3 points there. And then we can look for trades. Let me fix that a little bit. Then we can look for potentially on the daily time frame, and these things again, now since we're doing this on a weekly range, this is 49.33, this is a far balance, right? So we're not going to be necessarily looking for, if the market gets under that 49.97, that we're immediately going to trade all the way down 50 points lower, 40 points lower into 49.33. It will be a gradual type of progression like this, right? So it's not going to be the straight down drop because we're looking at such an expanded time frame. But if we are still above that 5,000, well, it's hard to really make a bearish case, right? We'll look for consolidation, and this is really probably the most bullish thing that we could see if we still just consolidate and accept over that 5,000, hang out here, maybe end up forming a weekly bull flag, and that's going to help push us up higher right now. But of course we do have Nvidia earnings, as we said before, high beta name in the market, so that can very much maybe be the catalyst that, at least for tech, and of course a rising tide or a sinking a falling tide is going to affect all ships, that can be the catalyst either, to either break us out or break us down, at least to the bottom part of the range, right? It doesn't mean necessarily that it's going to bring us all the way down, but we'll see, how the market reacts to their numbers and what the street really thinks of it, and then we can make a better estimation of where we think we're going to go. All right, so where would we head, right, if we broke back below the bottom range here? Well, I think the first, obvious target would be that 4,900 whole number, right? We'll just keep an eye on that. But really, what I'm going to be looking for is for potential trades back down, and we went over this before, coming back down into the top of this prior balance, right around that 48.50, 48.30, anywhere in this area. And we kind of went over this zone here before, as we saw when we came back and retested, and we'll come into the daily here in a moment, and we can pull up that chart with the balance zone is all still drawn out. But we came back, retested it, and then we pushed back up higher. And I think this was when we dropped down for CPI, if I'm not mistaken there. So where else though could we potentially trade down into? If we start to accept underneath, and break down actually underneath that 30, then of course, again, we'll look at the whole number, but it would be likely that we trade back down into the lower part of the balance, maybe into 47, 47.25, maybe 47.05, anywhere in the lower area here is what I would be looking at, if and only if we break under, right, the previous balance here, right? And still from here, we can kind of then, even if we get trapped in here, and it's possible that we don't really break down, it's possible we end up, balancing again in this area here. That's possible, but we can also use, our half gap as kind of that over under once again to see whether or not maybe, well, if we're holding over, say 47.77, 4,800, maybe we can come up and start to consolidate for that move back up. But if we don't, then we'll look for those same trades back down here into the lower part. And if we start to really accept under 47, now, I mean, this is very far away from where we are currently trading, but if we do accept under that, well, then we'll be looking for the retest, the structural test right here of this prior area, and look into this gap zone would be my next area to kind of target, bringing us down in 46.60, 65, anywhere down into the 46.30s thereabouts. So I'll be paying attention to that as well. Now let me pull up the other chart that we went over here with the balance range. Okay, this is let me get into the daily here, start to break down a little bit. Okay, right, so here are those same areas that we're talking about. Here's that previous balance, right? This is another area we could test. Here's the lower part of the range. Here's where we came down to test the top. It was a bit cleaner on the weekly, but here you can see that coming into retest that previous area that we broke out of. And we've still got that 5,000 marked off, of course, kind of as our pivot. That's the high from the second there, so obviously, and whole number, so we'll be watching that certainly as well. If we really start to get over that the previous swing high and accept over that 50 66 area, well then the next probably magnet that we're going to start to head to is going to be up by that 5100, right? That's what I'll probably be looking at for that next target. It won't be, of course, in a straight line, but we would slowly grind up towards that area, and then we'll see how price starts to react around in that zone. We are kind of freewheeling up here in the sense that we are we're in uncharted territory. And why is my chart doing like? Why is the chart doing that? Oh, did it again. Okay, well that's going to be annoying. But we will see. We will see. Here you can see in the daily we are coming a little momentum slowing down a bit, coming out of this hot zone as we were talking about on the weekly, a little bit stronger here on the daily. So we'll pay attention to how this cools off. But again, with Nvidia earnings, it can be very tricky. We're just really going to have to see how the market is going to react. Now, of course, really quickly, I want to go back on the weekly chart. Everybody's talking about it. Let me go here. Everybody's talking about it, that hanging man potential going on here. Oh, shoot. The hangman potential that everybody's talking about. Hold on 1 second. Oh. All right. But we'll have to see. No confirmation again until we're not going to see that bigger move until the balance breaks, right? So yes, we do have a potential warning sign here saying, all right, let's see. Sellers were unable to push us down. However, the buying pressure was not strong enough to get us back above the previous open. So we'll see how this plays out. So, again, I don't really, I do enjoy candlesticks alone when we're looking at per se a daily or even more so weekly or monthly. But I still, personally like to wait for a little bit more confirmation, and we'll see how this really plays out. Again, this can just end up turning into a bull flag, but we'll see how deep and if in fact we can start to accept under that half gap to see if we can start to trade down to the lower part of the range. And then we can talk, if we're hanging out down here and consolidating, okay, then we can start talking about maybe a little bit more bearish scenario. If we're hanging out under here, it would be the reverse. Maybe we're building up that momentum to actually break and head down lower. But that is yet to be seen. So we will wait and take this. We'll note it, of course, but so far taking it with a slight grain of salt, maybe a couple of grains of salt, because it is on a weekly time frame, but still no confirmation, just based on one candle for me personally. And sure, we have some supporting evidence here with the overbought, extreme overbought readings we are getting on the weekly as well. So we've got two reasons there, but gonna need a little bit more. Of course, at the end of the day, we want to go with the overall trend, and we've just continually made higher highs and higher lows. So nothing really has changed yet as far as that structure is concerned. Okay, so let's move it along here. I think that's all of the higher time frame analysis that I was looking to do. So let's now go into some of our other charts here and take a look at the dollar and the Dixie, as they have been certainly a center stage for me, at least, as we've been navigating this market. Okay, so we're here on the daily time frame on the dollar, and we were talking about that move over 104.50 coming into that 105 area. That's pretty much where we stopped short, couldn't break out over. And really my over under for what's going on right now is going to be still that 104.50. If we can still continue to see acceptance underneath that, we can probably see this cool off a little bit, come down to that 104 area. But unless we break under 104, maybe under 104, and really under 103.80s, then we can look at a little bit more of the downside trade here in the dollar, and look for something like this, trading back into this prior balance range is what I would assume would happen from there. And then we might just hang out and consolidate for a little bit. But as long as it still holds over that area, the 104 and 103.80s, we can still see upward momentum. The uptrend would still stay intact for me. So we'll see what happens there, but we will be cognizant of what what goes on here in this market, and really paying attention if we get over that 105 area. That will be a little bit more worrisome, as then potentially we could be trading up into these prior lows here on 105.50, 105.87, maybe even touching that 106 once again. So so far the market's really been able to brush off the moves in the dollar, more or less, but eventually at least one side is going to have to give. Which side it will be, that we do not know. But I can still also say here, for a case of being potentially overbought, Momo is kind of here on the daily, getting a little spicy, showing a little bit weakness there. So that is one encouraging side for equities. From this point of view, maybe we can even start to make a case for some type of a rising wedge type of formation, if you're into the patterns. And you can see here we tried to push up, couldn't find acceptance, and push down. So decent job there from the sellers in the dollar, keeping us kind of intact, but uptrend there still totally valid. So we'll see how this progresses over this week, and I'll be looking forward to see what the next weekly candle looks like. And we'll be watching this closely. All right, let's get into TNX here. Again, another headwind that we have been watching. The candle here on the weekly looks a bit stronger than the one on the dollar, but still you can make a case here. Actually, I don't want to do it with this tool. You can still make a case for, for the pattern traders of some type of, that's not going to do that. For some type of a potential rising wedge, however you want to look at, you can look at it like that maybe, but you could also just make it a channel, right? So it's really, and that's why sometimes these things can be a bit subjective, why I don't really use them quite as much anymore, but I certainly are aware of them, and many traders do use them. So just like moving averages and a lot of these things, they can become a bit of a self-fulfilling prophecy. However, for me, and I've talked about this certainly on rising wedges, stuff like that, it's really doesn't mean anything until the trend line uptrend breaks. So just like we talk about on the head and shoulders and inverters, head and shoulders, it's really meaningless unless we see a neckline break, right? So same kind of situation here. But let's get down into the daily on the on here, the 10-year. And okay, so this is the big level. We've talked about this was over the 41 is where I started to get a bit more nervous, and we thought we could see more upside. And we got over that 42. We're still holding 42. That's going to be the line in the sand for me. But I'm going to be watching anywhere from this 42.75, and it can even come a little bit lower. We could even say 42.55 there. I'm going to change this color. I could even look at, anywhere in that area. As long as that holds, we can put this as bullish, consolidation. But it's going to be all up to 43.30, right? And that's going to really give us the move. If we start to see pushes over that, well, then we're going to be looking at higher moves here in TNX, potentially pushing us up, putting more pressure on equities, I should say. We will also look here at this gap, and I'll just mark it off so that way we have it. Okay, so we'll pay attention to this as well. If we start trading up over that 43.30, look for this gap to potentially fill anywhere into 43.65 all the way up to maybe 44.25 for the gap fill there. So pay attention to that. Of course, if this goes up, this may also be another headwind, certainly for IWM, but the markets in general. However, again, the markets and IWM really have been brushing off these moves in TNX. So, we'll just see how it what happens, because we really don't know. It's been interesting. At what point does something start to break? and that will be the the $64 million question or whatever. But for me, over 43.30, then we'll look for that potential gap fill into this area. So I'll be watching that closely. All right. Boom. Okay, let's go into some of our other data points before we get a little bit more granular with the day trading levels for ES that I will be watching. Let's start off with breadth here. New highs versus new lows. Nice recovery here off this zero line, pushed up higher. As long as we're over zero, nothing wrong there. Let's see how these readings start to react as we're in this 204 to 290, 292 area. Had a bit of trouble here before, and then we saw turn downs and seeing a little bit here. So we'll see if this, has any effect. This area, but either way, we've talked about this with the new highs versus new lows. We could even be down just in the hundreds. As long as we're over zero, we're good. So really not too much of a concern for me on this. Everything's positive there and fine. Okay, SPXA 50R, right? How many stocks are in the SPX and S&P 500 are trading over their 50-day simple moving average? We've been watching this. We came right into that 50% mark, saw a sharp move up there, but we still are downtrending here with the markets more or less. They did pull back, of course, a little bit on Friday and Thursday, but we are still watching this potential divergence as these continue to just be in a downtrend and ticked lower a little bit on the Friday session. So we'll be paying attention to that. The 200, the SPX 200R here, how many stocks in the SPX are trading over their 200 simple day moving average is relatively flat. No real change here, as you can see. Just kind of ping-ponging, and again, 50% is going to be our warning zone, so really nothing to be too concerned here, kind of just trading in this little balance of these readings here. So we'll see. I guess we could say that we'll pay attention to see if maybe if we start to get readings back below maybe 65%, 64%, then maybe we could see a little bit more of a retracement in the market if we're seeing a little bit more of that overall weakness there. But until then, really nothing to be too concerned about here. These are holding up way better than the 50, and of course that makes sense. The 50 is a quicker, shorter time frame, so they're gonna have quicker reactions here overall. Let's take a look. It's something we never actually look at. Why don't we take a look at the 20? Oh, wait. Is it a different? Oh, shoot. Oh, it's a different code. All right. And I don't know what it is. There we go. Oh, they don't have it for the 20. That's why. All right, just taking a peek at the 100. It's pretty much the same. All right, they don't have it for the 20. I thought they did. Okay, let's move it along. All right, so we're looking at, I posted this chart on my Twitter on Thursday. We're looking at that divergence here in the bonds with the SPX. Now it's starting to actually diverge in the, this should be a daily. Now it's actually start to diverge in a positive direction, but on Thursday I was looking at the divergence from the negative, because we had the S&P here making new highs while bonds were coming in just into this downtrend here that we have been in. But look at this slight uptick here. So that's interesting. A slight uptick here in the high yield bonds where market's moving down. So I'd actually say that this is a little bit positive divergence, but really, it's kind of, to be honest, meaningless, because we really, for that divergence, I think, to really be true, we'd have to be over this downtrend line. So if we saw the bonds here being, over here, moving up like this over this trend line, then we could make maybe a little bit more case for that. But I'm going to note that the uptick here, but really meaningless unless we break out under. But either way, we were looking at this divergence. I pointed this out again on Thursday on my Twitter. If you don't follow me, it's at _SharkTrader, and you can follow me there for some of these charts that I am posting throughout the week in between these videos that I do put out. And if you made it this far in the video, I really would like to take a moment to thank everybody for joining me. If you're enjoying the content so far, feel free to subscribe to the channel, turn on that notification bell, and for the existing subscribers and people who come and watch these videos, I really appreciate your guys' support so much. And make sure to everybody, if you're interested in supporting myself or the channel, I have some links in the link tree, which is in the description, and feel free to check out those companies or any of those links as well that I support. So okay, let's keep it moving along here. So let's go into, see if we can get anything here from the VIX or the put call ratio. Put call ratio pretty much flat. Nothing really to mention here. No extreme there. We had VIX make a nice move up on the 13th, but as you can, but as you can see, never really closed over 15. It didn't close over 15.72. We were talking in last week's video, I believe VIX was right here on the 9th, or maybe it was the 8th when we made the last video, and we were talking about watch out, the potential springboard that we could see off of this area, and we certainly did get that, but the failure to accept over 15, over 15.75, really here, nothing wrong with that. We're just kind of back in this normal area. So let's watch, keep an eye over 15.75. We've been watching that for quite some time. But overall, I mean, from the low from last week, from here, I mean, we are, starting to create a bit of an uptrend here. And certainly from here, we have that uptrend as well coming in each week. This one's about equal low. But we're starting to maybe create a little bit of an uptrend here in volatility. So we will pay attention to that. But again, nothing to really be worried about overall too much in the VIX. And nothing really extremes here on the put call ratio, as we said, so that's fine. And let's get into VIX futures. One thing we were watching, this thing blasted off. Okay, good, I got the right one on, but this shouldn't be here. This thing blasted off in the last week's contracts before we moved over. We almost went all the way up to the zero line and back into contango, but when we updated the contract here, everything pushed back down, and now we are still in extreme backwardation here. So we're pretty much looking good from the volatility standpoint. This is not really that much of a concern anymore for me. VIX, the VVIX just hanging out in this range that it's been hanging out, so really no concern here, not anywhere near 75, so that's fine. We tried to get a little bit frisky over 100, but again, for the VVIX, I don't really get a little bit worried as far as volatility is concerned, unless we start seeing readings over 103, 105. Okay, then we can start talking about some more volatility we put into market, but until then, nothing really to worry about there. 9-day versus the monthly, still just continuing to stay under zero. So everything from the volatility standpoint seems safe and okay to me. So yeah, nothing really there. Let's take a look. We didn't look at the Dow and the transports last week. Let's take a look. We've been noting this divergence in the transports and the Dow for quite some time now. The only thing I'd say that's a little bit concerning here on the transports is the failure to accept over and what has now become the yearly point of control at basically what is this 15,896.75 we'll call it. I'm just going to round it off, but it's 87. I'm just rounding it off there to make it easy. Let's watch this point of control on the daily. If this starts to push down, we could potentially see back into the 15.5 34.50 area. Under that, we could probably come down and test the lows of the month of February, maybe down to 15.37.50 area, and under that, we'll probably head back down into the 15.216. So we'll watch this. This could be another headwind. Obviously, we've talked about the divergence here in transports and the Dow for a while, as that canary in the coal mine really hasn't played out per se, but we'll still note it, and I will pay attention there. One other thing though that I did want to mention, and we're focusing on ES here, so I'm going to look at the RSP really quick, the equal weighted S&P 500, and this will be a little bit more for SPY, but what I will note here for the RSP, and what I think is a little bit encouraging as far as the market overall kind of broadening out just a little bit, is the fact that we did break out, right? We kind of had this little inverted head and shoulders here, a little head here, shoulder, shoulder, and we broke out of the high of this previous balance, right? So as long now as we can see the RSP, right, and I can do this, and I could throw that up here like that. It could be a little bit higher maybe, but you get the idea. There we go. But as long as the RSP here holds back above this 159 and 158.30, as long as we hold above that, well, I think that is a good sign for the market overall. And again, this is the equal weighted S&P, and this is a good sign because this would mean that more of the market is participating in these moves to the upside, and that's what we want to see, right? We don't want to see the concentrated moves just in just in tech, just in energy, just in we want to see the market cycling through each one of these sectors, and I think that the RSP breaking out of this prior balance zone now is a little bit of an encouraging sign overall. Oops, that's not what I wanted. That's showing us that the market is why is this not? There we go. Here's the prior balance, right? And we've broken out of it. So as long as we hold over, I think that this is a good sign. Maybe we can come in and maybe consolidate, make a bull flag here, and then we can look to make a move up higher. I do have this 163, 163.60, maybe 164.65 area marked off here, and I think, let's just go back. Okay, well, I guess I was gonna say that's the previous all-time highs, but we're still gonna have some issues here. We're gonna have to we're gonna see if it can hold over that. We'll look to see what happens around this 161.30 area, and that would really, I think if we get over that, that could really give us the potential to make a move higher, maybe over 162.25. Keep an eye on that, and if that happens, then we can look at those all-time highs. But that would be great because we have been noting this divergence, right? S&P is at new highs, but the RSP is not. QQE though, and the QQQ, they are a little bit more in lock. I'm not going to pull it up, but they are a bit more in sync. We've been over that in other videos, and they are still more in sync, where the QQE did make a new all-time high with the QQQ, whereas SPY did not do that, right? So we'll see how that plays out. I think I said, I think this is encouraging, but if we do break underneath this balance, back underneath, we'll look at this as a failed breakout, and if that's the case, then we would we have a high potential of trading back into the previous the lower part of the previous range, which is, not really what we would want to see, but it doesn't mean it's the end of the world, by any standard. So, we could trade back down at least into the half gap here, maybe at 155.50, maybe trade back down into the 153, 70, 50 area here in the lower part. So we'll pay attention though for that potential fake breakout as well, and if that happens, of course, that's going to put pressure on markets as a whole. Okay, so let's go over ES here, and take a look at some a little bit more from a day trade perspective, some areas that I will be paying attention to. Markets here in the well, right now it's 12 o'clock, so I guess I should say the early Monday morning Globex are green, just slightly, basically flat, up about 4 points. Some nicer moves in NQ though, but nothing really going on here in ES. Okay, so let's get into some of our other levels we'll be watching. Okay. All right, so right now in this area, kind of in no man's land, right? You can see here where we traded in between, and this was, when was this? On Thursday, and we traded here in this kind of a balance within a balance, right? And we're in that same area now, right? We traded right up into this 49, what is this now? 50.30. So that's going to be the area I want to look for. Just be careful. I mean, within here, the 50.30 to 50.17. I mean, yeah, that's tradable, I guess. You can make a little bit of money in there. Maybe put in, you're halfway at, 40.20, but it's not the best trading environment for ES. So if you're really looking for something maybe a little bit better, I would be hands off if we continue to trade in this range. But really what you want to see is acceptance over 50.30, and then we can start to see moves higher, and I probably would be targeting around the 50.35 to 50.37. That would be my next target over that 50.30 area, and then we would wait to see if we can actually find acceptance. Then we would look for trades to come all the way up into basically the 50.46 area would be my next target for the longs, and then we would see what would happen. Maybe we can get over, if we can, we trade maybe 4 more points up into that whole number at 50.50, right? See what happens there. We've had some issues there before, and just above right there, that 50.33, 50.53 has been a bit of an issue as well. So we'll watch that here. But for the downside, right, if we start to trade underneath 50.17, and maybe I want to keep an eye on that 430 low, yesterday, the previous day lows there, we kind of made equal low there around 50.13. So maybe, I think it probably would be better to use that. But back under 50.17, I think that could be a warning sign. Then we will look to see really what happens under the 50.13, that previous low from the Friday session. Under that 50.08, and under that we'll probably trade back down into 5,000. And yeah, I certainly would be looking to be a potential buyer there. And even at 50.08, I would look to potentially be a buyer as well. For a trade back up into the 17.20 area. You can see the highs from last week right here, that I would be trying to catch that long off of, so I'd pay attention to that. And again, of course, whole number longs could be on deck as well. But yeah, that's pretty much all I'm looking at for ES coming into next week. Let's see what Nvidia gives us, and the 20-year auction. But again, I'd like to thank everybody for taking the time to prepare for the markets, joining me on the video. Remember, a prepared trader is a profitable trader, so let's all plan our trades and trade our plan. Thank you so much to the subscribers. If you've made it this far again and you haven't subscribed, please consider do so. Like, comment, share. I'll be posting this up at Twitter, so feel free to retweet it if you found it helpful, if you learned something new. That's what it's all about. And again, yeah, thank you so much. Enjoy the bank holiday and the extra day off tomorrow. And yeah, so I will see you guys on Tuesday, and let's have a great week. Take care.